Good afternoon, everybody, and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, March the 30th, a little after 4 p.m. Eastern Standard Time. I want to welcome everybody on board, new as well as old, and like always, let's get quickly through the disclaimer. This webinar is for educational purposes only. I'm not giving any kind of trading advice whatsoever. Trading does involve risk. These webinars are designed to aid and educate you in helping you make decisions. Okay. This market really rock and rolled today, didn't it? Anybody enter any positions today? Just out of curiosity, Dave, Ed, Jerry? John, Rick? Anybody? Anybody get into any positions today? Really a rock and roll day today. Bulkowski, the famous Polish trader who retired at age 36, he wrote the Bible on candlestick patterns, did a study for 3 years. I think I've said this once, but I think it bears repeating, that in a bull market, the best day to buy is on a Friday and sell on a Wednesday. In a bear market, the best day to buy is on a Monday, and the best day to sell is on a Thursday. So if you think about it, if we were all sitting here this last Friday, 12 noon, and the market was kind of it was pretty flat, not a lot of action, ended up about 34 points, would have been a great day to buy some positions, right? Okay, with that said, let's go to the macro picture first. And on the left you have the Dow, in the middle you have the S&P, and on the far right you have the NASDAQ. As you see in all three of the indices, the blue dotted line, which is a 49 EMA, is above the red dotted line, which is the 89 EMA. So two very, very powerful floor trader moving averages. They're exponential. And when you see that on a daily chart, that still means the direction is in the direction that the 49 is either above or below the 89. We did have a breakout today on the Dow. We had a breakout last week already on the S&P. We're trying to break out on the NASDAQ. It pulled up and gapped up pretty significantly today, and it moved up 56 points. Dow went up 263, and the S&P went up 25. To see where this potential extension will go, we will take the last low. I'll tell you what I'll do to make this a little bit better for people to see. Let me maximize each cell when I do this so you guys can see this a little better. Simply go from the last low to the last high, back down to the last low. That's how you do extensions. So let me now blow that up so you can see that a little better. And you can see here's your target points of where potentially the Dow could go. This would be 100% extension, and then you have the 123, 138, 150, and the 161.8, which is a huge one. It's usually major resistance at that level. So let's look at what the historical view is for the market at this time of the year, because we're coming into one of the best months of the year, and that's April. Today, of course, in economic news, I'll get to that in a second. I want to finish this macro picture. This is since 1971. So we got 81, 91, 2001. So we got, what, 44 years worth of history here. You can even just visually see, based on the composite, things go up. We'll just keep this at the default best trading whole zone, 14 days, which everybody is used to doing, and just highlight this area between April and May. This lights up red. You will never find this to light up green on this many years. It's just impossible. There's too much history and there's too much spaghetti above and below. But you do look over and you see there's a 71% probability that the Dow goes up beginning April towards the end of April. That's using the best trading hold zone 14 without switching anything. You could mess around a little bit with best rating and best profit and probably find a little bit more. I like to leave it at the default. So you've took 1.49% as the average move, which is a 71% historical probability. The odds are definitely in our favor that the market's going to be going up. So if you take the Dow at 17,976 and multiply that by 1.0, what was it, 49? Yeah, 49. 49 to give us a target of where could potentially the Dow go. It's 18,856, which actually puts you above the 200% retracement, way up here, close to the top of linear regression, if not above. This is, of course, I'm looking at a 6-month chart. Let's do the same thing on the S&P. Take the last low to the high, down to the left. Oops, I think I did retracements, but my apologies. Okay, so now we see where the S&P could potentially go to. $21.38, $21.49, $21.58, respectively. So let's go see what historically the S&P does now. Okay, this is just from a candlestick perspective, best choice. As you see, you have a half Scion hash mark, which according to the swing trading program that was pretty accurate in the early days built into the software, for short-term moves, it indicates there's a 75% probability that tomorrow the market will go up. You can see very well it bottomed out at linear regression, had a positive candle day, bullish engulfing pattern, and boom, it exploded. So what do we do historically? Okay, once again, defaultly set best trading hold zone, 14 days, highlight between April and May to see what historically we can expect. This area lights up, 78% probability with a 2.65% move. So if you take that, where could it go potentially? 2086. Excuse me 1 second, please. Somebody is calling me for some. My apologies. I should remember to turn my phone off. A telemarketer called. 2086 is where the S&P closed today. We expect a historical move of 2.65. So we're going to multiply that by 1.0265. Give us a potential target of 2141, which puts us between the 123 and the 138% retracement in this area, which is between the midline and the top line of linear regression. So that's where we can expect the S&P to go, continued. And last but not least, our favorite NASDAQ. Which is where primarily all the stocks that I trade on a weekly basis are at. As you see, you can see this blatantly when you do this. That's why I believe in Fibonacci so much. Here's the 61.8%, a major retracement area that is usually a point of resistance. At 49.51, what did we hit as a high today? High today we did 49.48. So there's a little bouncing off of this area. And these are the next marks of where we can go to. So on the NASDAQ perspective, asterisk COMP, asterisk COMP. Once again, and this is the area between April and May that we're going to highlight to see what historically we expect. If I can pull it up. 70% probability. Yeah, 70% with 1.79% move. 29.47, or 49, I'm sorry, 47 times 1.0179 gives me a target of 5,035. Again, we're going to break that 5,000, which is right past the 100% retracement. So it's actually below the last high that we had here. That's where we can expect things to move from a macro picture. When we look at the VIX, pretty much meandering sideways, comparing that to the S&P. And we can see that it's kind of stuck in this range. The MAs are pretty much flat on top of each other. The 49 is below the 89, heading down. So these are going to be acting as resistance every time it tries to bust through. It's going to come back. You can see that pattern happening. On the converse side with the S&P, the 49 is above the 89. We have a breakout coming up with linear regression going up. Okay, to the that's the macro. Let's go to the micro picture. What can we expect this week? Today, personal income spending came out, and it was up 0.4% in February from the 0.3% in January, which was a big surprise. Now, I was listening to some very astute analyst on a video off of Thinkorswim's Newswire, and the individual said if you look over the last 50 years, when personal income savings has gone up and automobile sales are not as strong, that's indicative of a very positive market moving forward. I'm sorry, not automotive sales, apparel. My apologies. Personal savings and apparel. So when personal savings goes up, normally apparel spending goes up. Now, if people have money, they go buy things. This case, it's different, though. Apparel is not getting that same boost as it is comparatively speaking over the last 50 years, which means people are saving money, they're not going out and spending it, and therefore that means down the pike. And that's also with the reduced oil. That's the same exact comparison, oil and apparel. So if the cost of the barrel of oil is down and our savings is up, where are we putting that money? We're not spending it, so we're putting it into savings. That's why personal income is up. Now, also today, there was a lot of M&A in the healthcare sector that was consolidating that whole industry. One of the big ones today was United Healthcare, which is a company I used to broker for. Well, the only one's endorsed by AARP for their Medicare supplements. They just bid $12.8 billion for Catamaran so they can own that pharmaceutical brand. The other big M&A potential today is Teva, the big Israeli pharmaceutical company that has been relisted to the NASDAQ, is said to be buying Auspex Pharmaceutical, symbol ASPX, for $3.5 billion. So that's what happened today, and the big one is, the big surprise was pending home sales jumped 3.1% versus 0.3% that was the estimate for February. So this is what happened today. What we need to look forward to is always in the beginning of the month, that first Friday is the unemployment situation. We need to look out for that. And we have jobless claims the day before, international trade at the same time. But it's really the jobless claims and unemployment report that's going to move the market. Do watch out for the ISM manufacturing. But it is not as important as the jobless claim and the unemployment situation. This will give a pulse to the Feds as well as the manufacturing of how well are we doing. Is there going to be that potential raising of rates later on in the year in the fall? Okay, so that's the micro picture. There's only one earnings I'm going to talk about, and it's actually a non-directional. and that is a company called Monsanto, which I'm sure you guys have heard of. Historically, it's a mix, but it's predominantly towards the short side. Okay, it's not one that I would take directionally. It's just not. There's too much spaghetti below and above the composite. So as a result of that, though, I said, I see a lot of consistency, though, in the dollar movement as well as the percentage movement. So then I went to the charts and I said, what would this look like? And pretty much flat, which is good because I analyzed this yesterday. For the April, this is what intrigued me here, folks. 17,735 open interest with today 11,638 options either bought or sold. More than likely, they're buying them. But what's interesting is that's at the 115 level. Look over here at the put side, at the 110 level, another 17,000. You think somebody's not doing a strangle on this? I do believe so. So that's what I am thinking of doing. By the way, these earnings are coming out 4/1 before market. So that would be Wednesday morning before market. So you need to think about this tomorrow if it's something that you're going to be considering. But this is a strategy that I'm thinking of doing, is buying the 115s at the same time as buying the 110s. Not spending a lot. $2.69. Okay? Now let's analyze this real quick and put it on Thinkorswim's risk profile. You can do it risk profile or simulated. It doesn't matter. But what you do want to do is on the price slices. This is what's important. Now remember, we're expecting about a 2.54% move, primarily to the downside. So with that in mind, if I said, all right, let's do that here. Let's buy the 115s. At the same time, we're going to buy the 110s. So now we've created a strangle. And we're expecting, I'm going to bring this percentage down to, let's say, 3% up with a potential of 3% down. Okay? So 116, 109 in that area. Not a lot of profit on one contract, but you're playing it pretty safe. If you did 4 contracts, it's $238. But either way, now, if we expect it to go down to 109, which would be below that 110, the 116, which is above that 115, that's what you want when you do a strangle. You need the stock actually to go through these pretty heavily in order to be able to make money on a strangle on an earnings play. But it's something I'm considering. If you look at what the break-even is on this, break-even on the bottom side is 107, so it could go all the way down to that and all the way up to 117 before I'm going to break even. Okay? So that's the only thing I'm considering as far as earnings this week. What I decided to do is go over Gary's 11 today. These are the primary stocks that I look at and trade on a weekly and monthly basis. Why? They're all behemoths in their industry. They're all got a lot of volatility. They all offer weeklies, which I like to do, as well as monthlies. So for all of those reasons, I like to trade them. On top of one of the reasons we're all here, of course, is because of Best Choice. And Best Choice gives us the historical perspective on all of these. Now, before I get into those and show you, I'm first going to talk about 2 trades, actually 3. Oh, David Summers, are you here today? Yes. Good. You emailed me, and I want to show this real quick and for your benefit, so it's on the recording, as well as for everybody else's. How do I do lists every week to find trades on Best Choice? Just a very basic list. And again, keep this in mind, everybody, I'm more of a shorter-term trader, more of a swing trader from a week to probably maximum 3 weeks that I'm going to ever hold a position. I don't go out 2-3 months. It's just not my style. Maybe when I get older, I probably will buy more time, but right now, I like to do a little bit faster action. So please keep that in mind, and that's how I designed this list. Okay. Simply go into the search wizard, you click the primary basic conditions, and you add that. It automatically loads them, and then ends up on average volume. You go over to the bar on the right, and you want to bring that volume up. I do it to 400,000 minimum. And I just happened to bring it up, and it stopped at 413. Now let's see if it goes lower. Nope, 381. So I'm going to keep it at 413. It's based on the last time I downloaded and re-indexed. Next, stock price. I want to change that. Once again, bring this blue bar up. And I'm going to bring it up to over $30. I don't trade stocks in their 20s. I've been burned too many times. So 31.37 is the lowest I can go for a current stock price. Last one is, or there's two more, but this is the last one on the default primaries. You want to last traded within the last day, last traded within the last number of days. If you think about that, you want this stock to at least traded in the last day because our database is not always purged. So to do that, you'll go over to the blue bar and you're going to bring it down all the way. As you see, it reduced it from 1072 to 918. So it's been traded, it's ranked from 0 to 1, it's been traded in the last 1 day. The last thing I'm going to add is earnings growth. One of the things that Pete Hoyt taught me is if you're going to trade a company that's making money. Let's trade the good companies. You know, and let's not bother and waste our time trying to form fit into some company that we heard or read about that really isn't making money. And that's not what trading is all about. So what I'll do is I'll go to earnings growth rate for 2 years, and I'll add that as a condition. I don't want a negative earnings because it didn't change that total number of stocks. So I'll go over to the blue bar, and I'm going to bring it up to 20%. That's where I stop. Leaves me 268 stocks. Okay, that's what I save into a search list. I always just date it. As you see, I did one yesterday. Now, if you want to have more stocks to look at, now remember, who made money on Disney this year? Anybody make money on Disney's earnings? We all did. It was one of the ones that I put on the list. Anybody who traded that made a killing. Well, believe it or not, in the last 2 years, Disney has grown over 400% in their stock, or in their growth area, but their earnings, there's only 22.2% per annum. Okay, so if you go much above that, you'll miss out on great companies like Disney. And that's why I keep it at 20% or higher. It gives me a good base to start with. But once again, if you want to have more trades, just bring it down. And I don't mess with, I just go down to 10%. It's 351. Okay, so you know what? We're going to use that one instead, just so we have more trades to look at. Save it. Oops, I can't put that silly symbol in there. Okay. Go to the Cycle Wizard. These are the default parameters that I use. 14 days shortest, 35 days longest, minimum rating of 4, minimum win percentage of 100. I want the stock to move at least 10%, and I want 4 years worth of history. Click on the one we just created, click Start. It'll ask you to save it. Click Yes. Let it fly through these stocks here. And really what I'm looking for, since today is Monday the 30th, all I really care about when I do this list is the trades that are in April. So my eyes are looking here. That's what I'm searching for. How many stocks move at least 10% in the month of April that have a 100% historical win? Now, keep in mind, I'm using just a minimum of 4 years worth of data. Part of the reasons is companies like Facebook and other companies like that I do like to look at, Twitter, LinkedIn, they don't have necessarily that much history. So I want to be able to capture those if, in fact, there is a move, because there's a lot of volatility in it. Okay, 76 long trades and 1 short. Isn't that something? Wow. Huh, I've never seen those numbers. Oh, by the way, everybody that owns Best Choice, if you haven't done it, you need to. You need to go to the Help, Utilities, Downloads, change this from the default B to all databases, and then click Download, because there's a whole new database as of March 25th. It'll get rid of old ones and update new ones. Okay, so you need to do that because that was just updated last week if you have it. Okay, so then we'll go to our Trade tab that we can look at things on a monthly basis, find that list we just did. All I care about is the trades that are coming up in April. And sure enough, there it is. And so this is what I'm going to talk about, because this is what I did yesterday, is WIN, which is a historical pop-up of 8 out of the last 8 years, 17.76%. But be careful with that. There's an anomaly here in 2009 with a 52% move. Okay, so, you know, do you start form fitting and you average this out and weigh it to see if it's, in other words, eliminate the highest and the lowest and then add those up? You could, to be more conservative. I generally don't, but I'll just be more conservative in the strike that I choose. Okay. Now, one of the things I did is I went to Seeking Alpha, great site, typed in WIN, and this is the first thing I saw here is Starwood leads hotel sector higher. And I thought that's interesting. Starwood Hotels and Resorts, or HOT, reached an all-time high of $86.36 on huge volume. That interested me. That interested me. So as soon as I saw that, I went to HOT. And I said, what does HOT have to offer? And then I saw that. 29,000 options at the money for April. Pretty interesting. Pretty interesting. Then I went to the charts to say, hey, what do they look like from a technical perspective? Well, I didn't like that candle right there. That's a bearish engulfing. I've got an RSI here. Let me change that back to my DPO, the DPO that I normally use. Mobo DPO, David Elliott. This is a little bit more mishmash. Up, down is what you can see. So that's why a lot of times I'll go to another indicator to say what else is it that doesn't react maybe so quick, like the RSA. I use weighted instead of Wilder. It seems to react better and more accurately with price movement. So yeah, it's kind of pointing down. It went up and hit the 70, if you can see that. Was oversold or overbought, came down, bounced up against the 70. Now it's kind of on a downturn following the DPO. So I was a little leery about trading that, even though I have a person's pivot study that triggered here, as well as a hull that's turned up. I've seen that, you know, I've seen that change. I mean, just because it's a bullish engulfing doesn't mean it's going to happen. But when it's a bullish engulfing at the top of linear regression, it's something to be, consider. But I do have a 49 crossing the 89. So the only other one I would look at is the SOAP. It's a tweak stochastics to see if it says anything. Well, see, the stochastics are turning up for shorter term, even though that's pulling down. So that's actually a positive. Anyways, that's one of the things I did to analyze it. Was not crazy about this stock. One of the reasons was after I read this article, or this little statement here under Starwoods, it's not what I was looking for as hot. I was looking for information on when, right? And it just happened to be that this popped up. This goes back, strong demand and pricing. They're going to be doing a dividend here soon. There's a resurgence in this industry, evidently. There's a lot of positive articles about Wynn and their growth. So I said, well, what does Wynn do historically? Well, there it is. Wynn goes up. So then I went to, I'm not going to do hot. I don't know. Something tells me to stay away. And that's an expensive premium at the 82.5, even though there's people coming out further out. So, because when I looked at historically, what does hot do, did not excite me, folks. Actually, it kind of steered me away when I saw that, where was this? I saw a short in here. Thought I did. No, maybe I didn't. There was another stock I was thinking of. Oh, there it is. 4.2 to 4.17. It's a short, but it does have earnings coming out. And if you look at that, that's more of a positive of 91%. So, and that's through earnings. So the way I see it, let this puppy pull down. There you go, 90% probability, bearish engulfing, top of linear regression. It's going to pull down. But you have a 50 crossing a 200, which is pretty strong. But, you know, it can cross and then come back down. As you can see here, it probably pulled up, but then pulled back down. So I would wait for this to pull down and then potentially look at trading the earnings. Okay, Wynn, what did I look at? Don't want spot month. I want to go to May. I want to buy some time on this one. Reason very simply is when you go back to that list we had and you double click the entry and it highlights that exact trade, that runs all the way into May. So I want to take advantage, and if this thing doesn't move right away, that I'm buying enough time in case it's going to be one of those laggers and then starts really running the marathon and catching and beating everybody by the end of the race. That was a good analogy. I like that one. 92.5, May, 180 is what I looked at. Oh, geez, things gone up. Was it May that I was looking at? Oh, I know what I did wrong. Two ways to trade this. I just put the wrong month on the Excel sheet. April 92.5s, right here. Got a 38 delta and only a 5 theta, which means a 33% move for every dollar movement, which is good. Or if you want to go further out and buy some time, go to the 95s and spend $1.65. So that's one of the ones I was considering. The other, from a historical seasonal perspective, same list as MAC. Big run up, 100%, 10 out of 10 years, 12.16% move. And I immediately go to, is there any action on this thing? That's what I want to know. Volume, volume, volume. Is there any open interest in volume? MAC. May, not a lot. April's a whole different ball game. 20,000 open interest at one strikeout, and 2 strikes out is 24,000. So a lot of bullish interest about here. Do have some short interest, but what I did is when you do a think back, and this is one of the things you guys can do. So I went to a think back on MAC and I saw something interesting. That. See, this is, it always defaults to the day before. So this is as of Friday, even though this says Sunday, but there's no trading on Sunday. Somebody on Friday came in and bought 10,000. You can see this blatantly, volume. The same time, they bought 10,000 on the put side. So that's a clear, oh, and how can you see this even more blatantly is go from a single, that's blatantly a straddle to me, and there it is, 10,004, 10,004. So very interesting, very interesting. A lot of excitement right now going on with this company, and you got a historical precedence that this thing goes up very, very strong. I have an asterisk. It says wait for retracement to bottom linear regression channel. Well, it did it. Maybe I was thinking about my charts here. Ah, okay. I guess then that I don't need to do because that already is retraced. Here is the potential where it could pop to, and everybody's loading up either at the 90s or between the 61.8 and the 78. I'd be conservative if I did this. I put the 90s below the 38.2 for a pop-up. But I would want some kind of confirmation here because these indicators are not telling me it's ready to pull the trigger yet. So I may go to some shorter term triggers to say, is something already telling me that I should go in, or do I need to wait? So I'll add my two faster term triggers. And I do have a template which is not the same as a green. You see that's a green arrow for the SOAP, which is a Tweaked Stochastics by David Elliott. It gives you the triggers. It's primarily designed for the shorts, for the red when it's overbought, but you can use this when it's oversold and you have a green trigger that is not the yellows, which are the template triggers. It's not as strong. So it's flattened out. It is definitely oversold on both the shorter terms. So I'd wait for maybe a little bit more confirmation, and it could bust over that 49 before I'd pull the trigger on that. Okay, last one I want to show you here before I get into Gary's 11 is Meli. Maco de Libre. It's the, I forgot what it is. It's the Brazilian eBay or something like that. I forgot what the heck they do. Mercado Libre. And it's not a fast mover. That's one thing you can see, and it's very consistent in its up and down movement. Huge pop here, right? I mean, I would be concerned about it trying to fill the gap. Almost did it here. As a matter of fact, that's probably close enough to where it filled the gap, and so it's not going to go down any further from here. Mercado Libre, though, does go up. 7 out of the last 7 years, 12.77%. Okay, one of the things I was concerned about, and remember, when you look at this, you're saying that the run on average, not a lot of years, not even 10 years, but on average, this thing goes beyond expiration date for April, which would indicate to me, I wouldn't necessarily want to do spot month on this. I would be concerned about that, though, because it's a 7-7 short. So when I see that, and I go, well, okay, starts not really till the beginning, maybe a week from now, and it runs till past. But you know what? These are averages. It could happen a week early, could happen on time, it could happen a week late. I'm sorry, Robert, I didn't look at the chat box. I need to start doing this more. I get caught up a little bit too much. If you could repeat, Robert, what particular stock or what I was showing when you said small print, please repeat. If you could just type it in and I'll go over it again. So in that regard, since this could start a week early, I said, well, there's enough open interest here at the 135s, but I wouldn't do it. I wouldn't stretch it that far. Remember, it's a 12.91% potential move. 1291. So if I took 121.67 times 1.1291, gives me a target of 137. So, okay, I could see that. It's cheap too, 65-cent premium. Wow. So the next thing I'm going to do is, what is the IV plus or minus? Well, that's only $7. Okay, that only puts me up to 128, right, of a $7 up or down potential move by expiration date of April. Definitely not at 137. Furthermore, that's only a 10 delta. Can you guys see that right here, right above that? So there's a lot of people loading up, and since there's only 3 weeks to expiration, I'm more conservative. I would play closer to money with a higher delta. It's one of the keys. You know, it's one of the first things I look at. Is it 0.20 or above? If not, I don't try to form fit it. I just go to the next strike. Why waste my time? So if I was going to do spot month, I'd do the 125s, which is only about $3.50 away for $2.15. That's still, folks, less than 2% premium. I mean, stretching to the 130s for 85 cents, I could potentially do it, but I don't like the 0.18. That's why I would jump to that if I was going to do it. The other option is go to May. Here's the problem with May. If I went to the 135s, buying time, it potentially could go further. There's only 4 open interest. So be careful when you look at that. I actually said the May 130s is what I put on the Excel sheet for $6.40. There's enough open interest to where between now and then this will fill up if this stock takes off. Okay, however, that's a 5.2% premium you're paying at the $6.40. That's rather expensive, as well as low open interest, which is a concern for liquidity. However, it's very strong historical. So you guys can make your decisions on that. All right. First stock I want to talk about is what I was spending a lot of time looking at today, and that's our good old favorite, Priceline. It finally retraced. If I put my cursor on that candle, which was the last candle before earnings, and you look at what the high is 1129.98. Look at what the low is on this one, 1130.86. So it finally filled that gap and starting to pull up. I do have a DPO that's pulling up in an oversold position. Let's see if any shorter term triggers gives me the rosy feeling to go ahead and pull the trigger. Well, I don't quite have the trigger on the stochastics, but what I do see that confirms everything with the DPO pulling up is the RSI was oversold. It's pulled up above the 30. The stochastics were oversold, pulling up. It hasn't broken yet, so I'd give it a little bit. I'd wait for tomorrow. That's why I didn't pull the trigger today. Just give me one more day, and then I can take a look at it. But the reason I'm saying this, folks, too, is all stocks have been beat down over the last couple of weeks. Everything. I'm going to go through my 11 here. Of course, we're on Priceline right now, but I'm just going to click through those, and I'm going to stay on the candlestick chart, and you're going to see how oversold everything is. And being in light of the fact the S&P has a historical preponderance going up this month, so do all the rest of the indices. We've now had 2 days back-to-back, Friday and today, with positive green light. Not a lot on Friday, big today, so tomorrow's going to be a little tentative. And hopefully we've gotten rid of this hiccuping of up and down every single day, which is whipsawing, absolutely whipsawing everybody. I even got whipsawed last week. So you have this time I'm changing it to best profit, best rating per coordinate, because I want to catch that tail end, which is really about last week, towards the end of last week, middle of last week, right into the beginning of April, meaning next week. And again, this could all run a week early, on time, or a week late. I'm thinking this year this is running a week late, as you see here. So another important thing is the 50 has crossed the 200, and all price, of course, is above that. That's an important trigger right there. Even though you got a MAC pulling down, this is a lagging indicator, as you very well know. So back to the charts, where I can fine-tune my entrances and exits and allows me to manage my trades better. I expect the historical move of about 3 point, well, where is it? I thought I had a 100%er in there. There it is. There's my 100%. 327, which is really over the, from Friday till the 8th. 100% move, 4.22%. That's what I'm looking at. Pretty good consistency in percentage over the last 5 years. And really that is weighing it, but this company has exploded over the last 5 years. It is leading the way of online travel booking. There's one that's coming up, though, for hotels. Something B&B. Forgot what it is, but you got to watch out. They're going to take business away from all the big name companies. You guys can look it up. Something B&B. You know, literally the initial B&B. SomethingBnB.com. They're privately held right now, though, but they are taking things by storm. 4.22% is what I expect. Stock's 1149. Times 1.0422. 1197. In between the 23 and the 38. 1 month standard deviation, up or down, right? But I'm biased towards it being up. $88. Well, just add 88 plus, let's say, 1150. That puts me at what? 1230, something of that nature. Oh, the BCS data was small. Okay. Why don't you run the 11 through the wizard? I have. And it's showing me things. But sometimes I like to do things just manually. It gives me something more to do. And then because when you run it through the wizard, that's based on, and that's a good point that Robert's bringing up. In other words, why don't I take my 11 stocks and just run it through the wizard? Well, I have. I've done that. But what happens is, I don't remember when I ran this. Price changes a little bit. History doesn't. And history gives me these three things that normally go up. Baidu, Apple, and Priceline. But Apple and Priceline not to the middle of the month. Here's the thing. That's just historical. Give or take a week or two, okay? Give or take a week or two. You need to look at more of the technical and say what's happened. Okay, as I said, this finally retraced right here to the last high, so it's filled the gap. That's what I was waiting for. Okay, so if there's a trigger for me to come in a little bit earlier to be able to take advantage rather than have to wait until this time, where is that? Yeah, it's a 90% probability from here to here. So, you know, from year to year, things will change. See, it's gone down, down, down. What I'm looking for is this little pop-up. Short-term trade, folks. Short-term trade. Looking for that 100%er. Based on the historical percent move, BCS puts it at, that's that 4.22, puts it at 1201. I think I did it when it was 1152. Did it midday today. So the IV plus target right here, $46 plus that puts you at about 12, what was it, 1205 or so, right? 49, 46 plus 49, 1149, 1206, 1205. And you have $88 here, which puts you way up there at 1230, 1235. So everything's above 1200. So if you can see that is where the most open interest is and the most volume. It's 1 point shy of being a delta of 20. I would take that. If this was 16, if it was 15 in that area, I would pass and I'd go closer to the money. But you go to the 20 with a delta and it's just only 14. You know, I'm not going to mess with that. Now that's April. Probably wouldn't stretch that far for only 3 weeks, even though, folks, if anybody's ever traded Priceline, this thing's a bugger, man. It can go flying upwards and it can go flying downwards. I mean, it's just a huge mover. I mean, it's not uncommon for it to move 25, 30 plus points in a day. So, you know, 2 moves of $30 puts you way over 1200. But I'd be a little bit more conservative, I think, than stretching all the way out here for 2 weeks to go. I mean, that's less than 0.5%. I'd probably, if I was going to trade this, it is coming into some premium. One contract's over $1,000. So, you know, keep in mind risk and money management. Very, very important. You have to have those rules of trade size, something I reviewed over the weekend big time because I was trading the E-mini and getting whipsawed all over the place. And I abandoned my minimum risk tolerance. So I paid the price for it as a result. Anyways, I'd go closer to the money on Priceline. Starting from Apple. 90% probability it's going up, bounced off the 50. And as you know, it's been beat down. It was as high as 133. A lot of us were playing the 130 strikes, and it just came shy of that. Didn't quite hit it. Pull down, pulling up. So if, in fact, this is a market turnaround, and the market is going to maintain bullish, Apple would be a pretty nice looking trade at this point. Problem with it from a seasonal standpoint is it's a 90% short running into earnings from about this time to when earnings comes. On the flip side, when earnings do come out, it's a 90% long. So what do you want to do? Short it or just let it meander, play, and you know, the other option to do is play the run up to earnings. I used to call a RUI, run up into earnings. 61,000 contracts bought or sold today for the April monthly expiration of the 130s. There's also 50,000 volume on the put side. So could it be some big players came in on both sides? Well, one way to find out is go to a straddle. See what the straddle says. There's 50,000 there and 50,000 there. There you go. See that, folks? 50,741 volume on the call side. 50,741 volume on the put side. Somebody came in, big player. Probably dropped 50,000 contracts. That's expensive. 580. Wow. Wow. $5.75 times 50,000. Somebody dropped 28 million? Whew, I don't think so. That's a lot of money. It's probably broken up. But as you can see, a lot of interest, and that's the whole point of me going through this exercise with you guys is, you know, are you going to look out for the short? There's a high probability from a charting perspective. Here is the probabilities of extension for Apple. 50% extension is at 50%, well, the 130 is at 50% extension. But as you see, 49 is above the 89. We have a breakout on the MOBO. Everything is looking pretty positive. Probably wait for the hull to turn over. Wait for it to turn color. And then off to the races. Amazon, I really didn't like from a seasonal standpoint, 50-50, so I passed on it. Baidu's a different matter. Baidu I liked. It's a 100%er, so I listed that. I'm running out of time. It's 5:02 already, so I'm going to fly through these. Baidu is a potential right now. It's pretty inexpensive. I looked at the April 215s for $2.08 earlier. Target price of best choice of $2.27. So it would put you right about in this area, right back up to where I was trading in here. I don't know what happened to CMG. The bottom fell out today. I don't know why people were selling off on it. It was as low as, and this is a big concern of mine, is that's a bearish engulfing. What I'm thinking is maybe it will come down here and hit the 647 as a bottom. And if it does, why, then it will be a good play. So I'm going to wait on this one, even though I listed it in the seasonal move, because it is definitely a seasonal move. And it is oversold on best choice linear regression, right? Sitting right there at the 12.3 extreme. Actually, probably even more now. Yeah, 6.7 extreme, way over here on the right. So it's definitely way oversold. So, I mean, are we forming a double bottom is what I'm looking at right here? Even a triple? This isn't quite a triple, right? Or is this a head and shoulders? Head, shoulder, shoulder. If that's the case, I'd be concerned of this thing tanking. So CMG I'm going to wait on. ISRIG, Intuitive Surgical, big pop-up, 90%, 70%, 75% probability it's going to go up tomorrow. And seasonally, it's pretty strong. For some reason, I had 100% on this, so there it is, 6.81. Let's see if I can find it a little bit tighter. Oh, 8.37. So we're talking about someplace that was starting last week, 90%er, like middle of last week or before last week. And what I looked at, and there's a 6.81% move, I was looking at the April 525s. which would put me right smack dab between the 50 and the 90 into this area here. So the 525s, only 75, but that's the one I like. I've seen Intuitive Surgical is weird the way it moves. Sometimes it just doesn't move. But then when it does, it's like when I've got this sorted of under net change, which one moves the most to the least. It's just weird how it'll pop up. I mean, did you guys see Tesla today? Tesla was way down and then popped up. I mean, between Tesla and Netflix, I'd be a little bit concerned with these guys. It's a 4 out of 4 short, Tesla, and it is not looking good. Even though it pulled up for some reason today, I think this would have been a real good day to come in and buy a put because everything is pointing down on it, and we have a historical precedence for it to come down. So I didn't put that as a short. I probably will, though. Netflix, one of the favorite ones to trade. Don't really, I'm concerned about this one too. Oh gosh, where was it? Well, it's a 50-50. Oh, okay. What one of our members said that Tesla is going to be bringing out a new product category. New product category in regards to what? I mean, they build that fancy electric car. What else are they going to do? I know they're putting electric stations. I remember an earnings report last year when I listened to the conference. They were saying they're going to install 500 electric stations around the United States to help facilitate. And what's interesting, did you know how long it takes to recharge? Like if you go to a station, these new stations they're putting in, you come in with your electric car and you think that you're going to plug it in and sit there and wait for it to be recharged. The actual time it takes is less than 2 minutes to completely recharge the battery. You know why? It automatically goes into the engine and swaps it with the brand new charged one. You're not sitting there waiting for the original one to get recharged. It just flips it. You've already got a whole stack of charged ones. You go in, boom, it automatically replaces it, and you're on your way. So it's a pretty neat thing. Rumored to have the battery for another use. Yeah. I mean, Elon Musk, boy, I'll tell you, he is ingenious. He's a very resourceful person. So Netflix I was a little concerned about. I was also concerned about this pattern here, even though maybe, I don't know if it'll ever fill this gap, right? Like what Priceline did. I mean, if you look at Priceline on this same type of chart, it had that same gap up, but it went all the way down and filled the gap. Netflix hasn't, but sometimes stocks just don't. I mean, even though here when it tanked, it ultimately refilled the gap way over here with this big earnings play. There's a 75% probability it's going to go up tomorrow. And we do have a 50 that's crossed the 200. We have some conflicting information, though. You see what I'm saying? 8 crossed the 21 EMA here, all pointing down. 50 crossed the 200. So we may be coming into some consolidation in regards to where this direction of this stock is going to go. But historically, just nothing that excites me. MasterCard, not a great run, 87.5% probability. I did put it down. Visa as well, not as great. And it's 85.71, but it starts towards the middle of the month. Last one, though, from a short perspective, besides Tesla, I don't know, now that one of our members said they're going to be rumored coming out with things, those kind of things can throw off cyclical patterns and seasonality big time. Well, we know this list only had one short, so it's not in there. It was in my list I did here, I believe. Nope, it's not in there either. Well, this is March. I'm sorry, I need to be April. I don't know who CSR is, and it's way at the end of the month, so. But this is the one I found as a short, if anybody likes to short the market, is Lannett, LCI. It's 100% short, 6.22%. And so I saw this open interest over here at the 60s, but because it went up $2.35, it played closer to the money at the 65s. Okay. Welcome, Ira. You came in right at the last minute, my friend. Unfortunately, you'll have to watch the recap. We'll talk about it later because I'm already done. Anyways, that is what I have for today. Anybody have any stocks they'd like me to quickly go through? Quickly? Go ahead and type them in. I'll be patient and wait. Anybody? Going once, going twice. Okay. CNX, how is CNX doing? It was to be a short. Yeah, let's take a look at it. Nope. Seasonally speaking, it's a long right now, 329 to 423. Make sure I've got accurate data. Wow, now it's a 90% long. See how when you have to hit that button puzzle piece so it'll download any bad data that you have. Plus they've got earnings coming up with a 90% probability to go long. So if I change that and I see two 90%ers from here to here, it's only 70%. So I would, if you're thinking about shorting, this was the short area here. And it did go down 5.74%. It was a huge short. But now it's slated to pull up. 90% probability. Wow, 17,351 at the 30s. Don't like this pattern at all, but we have a breakout with an oversold DPO pulling up and a DPO pulling up strong. We do have a hull that's pulled up, but now it's pulled down, so maybe it's trying to get its legs. That's, of course, on a 6-month. 3-month, I don't think will make any difference. Yeah, don't like the 49 above this, but this stock has been pretty beat down. So this may be a hiccup, and it may be pulling back up because we do have a historical precedence for it to do that. Not real strong, not as strong as with the earnings right here, because that's a 5.8 rating, 90% probability with a 9% move. So probably would wait, and if you're in a short, I'd be concerned about, taking some profit, get it off the table, wait for the earnings to come out. Don't have earnings there. On the 5th. So they're not coming out until May 5th. So that's why I didn't see it here in April, and I don't know if TOS would have it. See, TOS doesn't even have it yet either. That comes from Zacks, by the way, so probably would wait for the earnings to come out before I traded it. All right, anybody else have any stocks they want me to look at real quick? Nope. All right, folks, thanks so much for attending. Certainly appreciate it. Like always, be careful. Use risk money. Use your money management, and make sure you stick with your trade size and your risk tolerance. And I wish you guys good trading. And until next week.